Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Canadians choose Carney. The former central banker leads the Liberal Party to a fourth consecutive electoral victory. But the Prime Minister will need support from across the aisle as he forms a minority government. Firm stance. China warns other nations against giving in to U.S. tariff threats. Foreign Minister Wang Yi says doing so will only embolden a bully. And Etihad Airways Group CEO Antonoaldo Neves joins us live to discuss the Gulf carrier's growth outlook, the impact of tariffs, and its potential IPO. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Before we get to our usual recap of markets, I want to bring you some breaking news that we're getting from the banking space. HSBC results have just dropped. And let me tell you, a very big beat versus the estimates for the pre-tax profits, coming at $9.48 billion versus estimates of $7.83 billion. They have also announced a buyback of up to $3 billion. The first interim dividend per share of around 10 cents that has come through. On the revenue figures, the number has also beaten. So we've got a Q1 revenue figure of $17.65 billion versus the estimate of $16.67 billion. So just to recap here, we've got a beat on the top line, revenue coming in higher than estimates, and then on the bottom line as well, pre-tax profits. Also a huge beat versus the estimates of 7.83 coming at 9.48 billion. In terms of NII, so this number is always a good one to watch in terms of NII, net interest income expectations. Expects banking NII of around $42 billion in 2025. So no change from the prior guidance, despite some of the rates volatility, I would just call on. And then targeted growth in operating expenses of about 3%. And of course, a big focus for the new CEO, relatively new CEO now, he's been in the position for a couple of months, has been keeping a lid under the costs. And they have, of course, announced $1.5 billion worth of costs. And now they say that the targeted growth in those operating expenses is around 3%. They aim to generate around $300 million of cost reductions throughout the course of the year, throughout 2025. The other big announcement today has been that $3 billion buyback of up to $3 billion of buyback and the dividend of 10 cents. So a big beat coming through on HSBC on both the top line and on the bottom line. We're going to discuss that more in the show. But let's also switch over to one of the local banks. This is First Abu Dhabi Bank. So we are over here looking at a beat as well on operating income. FAB first quarter operating income coming in at 8.81 billion dirhams. This is versus the estimate of 8.18 billion dirhams. So a beat on that point. Their first quarter return on tangible equity has come in at 20.4%, again, higher than estimates of 17.4%. The pre-tax profits also coming in a beat at 6.13 billion dirhams versus an estimate of 5.17. Impairments also seeing an improvement, down 29% year on year, coming in at 724 million dirhams. And some commentary, FAB says it is well positioned to expand its scale. So a beat as well coming from First Abu Dhabi Bank. Okay, let's switch over to broader markets now. And what we are seeing is some stabilization come through. Remember, we spoke about this yesterday. The theme seems to be of one of de-escalation, or at least a milder tone when it comes to the status of this tariff war, even though the Treasury Secretary Scott Bessent yesterday in an interview suggested that they were focusing on other countries for the time being, not necessarily China. Today's new news, however, is that the Trump administration is considering a reprieve on some auto parts. So we'll talk about that in a moment. As you can see before me, S&P futures are leaning towards the green, up about 14 basis points. European markets also up 8 basis points as well. We have lots of automakers reporting this week, so any reprieve on tariffs on that front will be well met. The USD also seeing a bit of a boost today, up 0.2%. That recovery theme still intact for the USD. And then gold, with the recovery in U.S. assets, continues to come off. Today we are about 0.8% weaker. As for our terminal chart today, I thought it would be interesting just to zoom out and take a look at how the auto industry as a whole has fared, given we're going to be talking about that auto tariff reprieve later on in the show. And here, look, you can see very clearly around 2020, 2021, even the early stages of 2022, auto stocks were leading the global stocks performance. That all changed in the last couple of years, as we've talked about increasing competition in that space, supply chain issues, and of course, the latest salvo in tariffs. So the white line underperforming the blue line tells you that auto stocks have underperformed global stocks. Okay, let's switch on and check in on how markets in Asia are also faring today. Avril Hong is in our Singapore studio. Avril, run us through it.
Yeah, Jumana, you talk about that potential for de-escalation when it comes to tariffs, and maybe we see lower levies. But it's interesting how on a day like that, we're actually not seeing that really moving the needle. Maybe, investors want more meat on the bones as far as that is concerned. Where we are seeing a bit of outperformance is in auto stocks in South Korea, but overall, you do get the sense that earnings as well as economic data, that's going to be more key to watch. And we're actually seeing trading volumes a lot lower than our usual this time in the session. Japan, of course, is shut. So not just keeping out watch for some of the earnings. You saw HSBC earlier, but these Chinese banks as well, the extent in which their margins are going to be facing pressure if more stimulus needs to be delivered. Against that backdrop, I think the clearest expression of the optimism towards trade de-escalation is in dollar China. We're seeing it at its lowest level since late March. Part of this to do with the slump in the dollar, strong yuan fix, but also keep in mind that we're going into Golden Week. So the PBOC might be out of the picture. Maybe that emboldens traders to test dollar China lower as well, Jumana.
Avril, thank you so much. Avril Hong in Singapore. Now, on to our top political news today. Canada's Liberal Party has won a fourth consecutive election, a stunning turnaround for Prime Minister Mark Carney, who campaigned hard on standing up to President Trump's trade war and threats to make Canada the 51st U.S. state. But the margin of victory appears to be narrow, with Carney's government likely to need other parties to pass legislation. Let's go to Vancouver now and speak to Bloomberg's bureau chief, Thomas Steele. Really good to have you with us on the show. Earlier on in the day, I took a look at the polymarket odds of the Liberal Party winning the election in January of this year, January 2025. And Polymarket had put the odds at 3%. And of course, now they have gone on to win the election, albeit with a minority government. Why this remarkable turnaround, Thomas?
Yeah, I don't think anyone would have seen this coming. And a big part of that has been the behavior of President Donald Trump, who took office later in that same month. You checked Polymarket, January 20th. He entered the White House for the second time and started talking about Canada in a way that no one really expected. Obviously, he promised tariffs, but he levied 25% tariffs on his closest neighbors, and particularly with Canada, started talking about it as if it should be part of the United States and not its own country. So that really had a profound impact on the political contest here in Canada. At the same time, they changed leader. So on January 6th, Justin Trudeau resigned after nearly 10 years in charge, and they had a very quick leadership race, and they elected Mark Carney, known to our readers very well, I think, former governor of the Bank of Canada, then the Bank of England, careers in Goldman Sachs, followed by Brookfield in the private sector. Yes, so now it looks like he's set to helm a minority government, but it's very close. And it will be difficult for him, if these numbers continue the way they're looking, for him to find a stable or easy coalition to go forward.
Yeah. So let's talk about that, because their prior coalition partner, NDP, seems to have lost a lot of seats. They're now looking at, once again, the possibility of forming a minority government. Who are the potential partners, and what do we know about the appetite from the Liberal Party to partner up with some of the other potential parties that they could look to form a minority government with?
That's right. They could try and work again with the NDP, the left-leaning party they worked with before. But the NDP is losing a lot of ground. It may lose official party status, which means it would not be able to ask questions in the House of Commons. It would lose some funding, and that would be quite a weak combination potentially. The other smaller party is the Bloc Québécois. It only runs in the Francophone province of Quebec, and it really advocates for Quebec's interests, not necessarily separation, but culture and protections and funding for its own projects. So that would be a difficult or interesting coalition. The Liberals could also try and pass legislation on a case-by-case basis, trying to get votes from other parties to do that. That seems difficult. So we've still got to see how the numbers pan out. The popular vote is much closer than most polls had suggested, even as recently as this weekend. And so some people are also predicting this could be quite a short-lived parliament, and we could be going back to the polls again within less than 2 years.
Oh, wow. Okay, interesting. Thomas, thank you so much for bringing us all of the different angles of what could happen next out of these Canadian elections, federal elections that the Liberal Party has just won, seemingly against all odds versus where they were a couple of months ago. Now, President Trump is expected to ease auto tariffs, lifting some levies on foreign parts for cars and trucks made inside the U.S. For more, let's bring in China correspondent Min Lo. So talk to us, Min, about what we know about this potential auto tariff reprieve, because it's not a blanket reprieve.
Yes, and you showed that chart earlier, Jumana, that shows how U.S. automakers have been lagging behind global stocks, and that's the sort of pressure that President Trump has been under. And Wall Street Journal was the first to report this, that Trump is prepared to announce the exemption of these auto sectors from having to pay other tariffs that are stacked on top of the sectoral tariffs, meaning the 25% auto tariffs will not be on top of steel and aluminum tariffs. They won't have to they won't have to pay the additional other steel and aluminum tariffs, and this could be retroactive, meaning that tariffs that have been overpaid could be reimbursed. And meanwhile, we also have the 25% auto parts tariff that is kicking in May, and for that, Trump is prepared to announce partial reimbursement up to 3.75% of the total value of U.S. cars made in the U.S. for 1 year. Eventually, that reimbursement will be phased out, but it's meant to provide this runway for U.S. car makers to gradually move that auto parts supply chain back to the U.S. And President Trump is set to announce this as soon as Tuesday evening, when he's expected to go to Michigan, the heart of the American auto industry, to give a speech marking his 100 days in office, meaning we could hear this as soon as maybe Wednesday morning, tomorrow morning, Asia time. And it's likely going to be seen as a pretty important reprieve for U.S. automakers, at least in the short term.
Yeah, most definitely, and will be, as you say, key for the direction of travel for some of these automaker stocks. Let's just talk about how the Trump administration is positing this, because I saw some of the comments from the Commerce Secretary, Howard Lutnick, and he said this deal is a major victory for the president's trade policy. Does this tell us then that perhaps the focus on the Trump administration looking ahead is to ink more and more of these deals and to find exemptions within the existing tariff framework, as opposed to fully going down the route of repealing tariffs?
Yes, we have seen how, for example, the U.S. is now perhaps prepared to announce these easing of auto tariffs, and then previously they had announced exemptions to electronics. These are goods that U.S. are heavily reliant on imported products when it comes to things like chips, computers, iPhones, which are manufactured in places like China and India. And actually yesterday we have Scott Bessent saying that, especially when it comes to U.S. and China, the ball is still in Chinese park. Basically, that it's up to China to de-escalate, although he threatened that things could escalate further, saying that he has, quote, an escalatory letter in his back pocket, which he hopes the U.S. doesn't have to use. And when asked what that could mean, he says it could look like a trade embargo on China. But meanwhile, it's still this game of wait and see who's going to move first, because you have also Wang Yi, the foreign minister of China, essentially saying in the BRICS meeting in Brazil that any country that compromises with the U.S. is only going to see the bully trying to take further advantage, and that doesn't sound like a de-escalatory tone from China. We also see how China, in the press briefing yesterday, announcing all these measures to help its exporters shoulder the pain of these tariffs, which shows that China is prepared to tide through this for a protracted war, and they're not in any urgency to resolve this via some sort of resolution.
Min, as ever, thank you so much for the reporting. Bloomberg's Min Lo. Now, still ahead, here by Neovision Wealth Management says the U.S. dollar could lose up to, listen to this, 40% of its value over the next 3 years. More market insights next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Asian stocks and U.S. equity futures are higher on expectations President Trump is on track to ease the impact of his auto tariffs, boosting hopes for further dialing down of trade tensions. Joining us now is Ryan Lemand, Neovision Wealth CEO and co-founder. Really good to have you on the show, Ryan.
Thank you.
It has been, well, quite a volatile couple of months, but I would say just looking at the price action the last couple of days, investors seem to think that maybe the worst is behind us and that going forwards we could start to see more of a de-escalatory tone coming through from the Trump administration. What is your view?
Well, I hope so, because we've had a relief rally before, a few days back or a few weeks back. I have trouble believing that for now, because I don't see a real de-escalation. I will start talking de-escalation when I hear China answering back to the U.S. that, yes, we want to talk, we want to find a resolution for that. These things shouldn't be on the media.
Yeah. Okay, that's interesting, especially with some of the op-eds that are being written in Chinese dailies. So some people say that the damage has already been done to the perhaps more medium-term reputation of the United States, because we did see a shedding of U.S. assets, and it was quite pronounced a couple of weeks ago and actually prompted the Trump administration to come out with that 90-day reprieve. What is your view on that more structural shift and investors' inclination to stay away out of the U.S. in the next few years?
U.S. exceptionalism was based on the ability of the U.S. to issue debt in an unlimited way and do quantitative easing and boost their economy, spend, etc. This is what was attracting a lot of capital into the U.S. So it's the U.S. buying assets, sending dollars against them, and then these U.S. dollars finding their way back to the U.S. to invest into assets. The day President Trump gave an unsettled way of managing the U.S., second, attacking Jerome Powell, who's basically the safety trigger for the U.S. Monetary system, investors obviously lost interest in that market and even starting to feel fear. And that's why they went elsewhere where they have more stability. The only party that is holding the market together today are retail investors, basically, and the 10% richest Americans who control 93% of U.S. stocks. This is what's holding it together.
So he has dialed back his attacks on the Fed Chair Jerome Powell. So there's a bit of a U-turn there in that front. So you don't think that that's enough to reassure investors?
You know, the damage is there. So you slap someone on the face, right? And then you say, I'm sorry. The slap has taken place. And it was a big slap to Mr. Powell.
All right, let's talk about slapping the USD then. You have a pretty bearish view of the USD. It's definitely struggled in the first couple of months of this year. Your view is that we are set to continue to see further weakness in the dollar. How much more to run?
So as long as the current parameters are in place, yes, weakness of the US dollar in general against main currencies, CHF, Japanese yen, euro, etc., but mainly also against the gold, because when gold prices go up, it's not the actual price of gold that goes up, it's the US dollar that is weakening in cycle. That's how we see it. So as long as we're in that setup that we are in today, yes, we should see US dollar. This is beneficial to the US ultimately.
Yeah, well, yes, assuming that there are customers outside who want to buy US manufactured goods. But let's just hold that thought for a second. Gold. Ever since I've been interviewing you, and I've been here, a year now, you've been bullish gold. It's had a tremendous run, but it started to come off. Do you think the gold trade is over? Would you still, if somebody hasn't bought gold yet, would you still buy at these levels?
As long as we're in exactly the same parameters we are in right now, yes, we would buy gold. The current dip is a great opportunity to buy. And anyone who missed the gold rally can buy silver. It's a nice proxy, though storage is an issue.
Why didn't silver participate in the same rally as gold? Lots of people were talking about that ratio between the two, and it reached 2 standard deviations.
The biggest buyers are central banks. Central banks, they buy actual physical gold. Storing silver at the same amounts, you'd actually need cities to store that silver. So gold is much more practical for the central bank to buy and store underground. It's a storage question.
Yeah. Do you think, though, that silver is an opportunity to get long and get some exposure to safe havens then?
It is, but it will not have the same rally as gold because we don't have the driver, the same institution driver that we had with gold, which is institutional, very large buyings.
Yeah. You mentioned some of the other safe havens. So quite quickly now, you just rapidly went through them, but we're talking about the Swiss franc, the yen, even the euro to a certain extent. And I just wonder whether, again, that trade may also run its course, because when you think about the European trajectory, they do have a hit coming from tariffs. The growth profile isn't particularly positive, and maybe there was too much emphasis on this German fiscal package, albeit only one country within the Eurozone as a whole that has that fiscal firepower.
The main driver of European stocks going up have been the defense stocks, for obvious reasons that we know. If today the war in Russia and Ukraine is resolved, then this trade is gone. That's why I agree with you. The European trade is limited to a certain extent. That's why we tend more towards fixed income, just for stability. But otherwise, it's mainly Swiss stocks and Japanese stocks, because we do believe that the Japanese yen will go below 140, and that's a big benefit for holders of Japanese risk assets.
Yeah, Ryan, always good to chat to you. Thank you so much. That was Ryan Lemand, Neovision Wealth CEO and co-founder. Well, coming up later on the show, Russia's Vladimir Putin declares a 3-day ceasefire in the war in Ukraine, the move frustrating President Donald Trump. This is Bloomberg. Iran is pitching its sanctioned economy to the U.S. as an investment opportunity, with top officials promoting the country's trillion-dollar economic potential of securing a lasting nuclear accord. The success of the negotiations depends on the removal of primary U.S. sanctions and the Iranian government's willingness to make significant concessions. The U.S. and Iran reported signs of progress in talks in a deal after what the Iranian foreign minister described as increasingly detailed discussions. And you look at equity futures, things are stabilizing, leaning towards the green. S&P futures up 0.2%. European markets also up about 0.1% as well. Coming up, we cross live to Abu Dhabi as Etihad Airways Group CEO Antonoaldo Neves joins us to talk outlook, impact, and IPO. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Canadians choose Carney. The former central banker leads the Liberal Party to a 4th consecutive electoral victory. But the Prime Minister will need support from across the aisle as he forms a minority government. Firm stand. China warns other nations against giving in to U.S. tariff threats. Foreign Minister Wang Yi says doing so will only embolden a bully. And Etihad Airways Group CEO Antonoaldo Neves joins us to discuss the Gulf carrier's growth outlook, the impact of tariffs, and its potential IPO. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, we walked in this morning to another potential tariff announcement, this time on reports that the White House is considering a reprieve on the some auto parts that are imported into the U.S. And that is beneficial, obviously, for automakers. I'll show you a chart in a second. But ultimately, this just ties into the whole narrative of the White House looking to forge deals, looking to potentially de-escalate, and even include exclude or introduce some carve-outs for specific industries. So on the back of that, we've seen a bit of green for both U.S. markets and European markets this morning. S&P futures up 0.2%, European markets up 0.1%. Bear in mind also we have a whole bunch of European earnings hitting this week. We just had HSBC results break at the top of the show. Very strong results. So keep an eye out on how the stock performs once the UK market sets up for trade. At USD, we're seeing a bit of a bounce there, up 0.2%, so a continuation of that positive theme that's been playing out for the greenback. And then gold has been coming off a little bit, down 0.8%, though as we were speaking to our former guest on the show, Ryan Lemand, he thinks that the geopolitical uncertainty and really the questions around the narrative around the White House are going to continue to support money pouring in to the safe haven, in addition to central bank buying. So we'll see what happens in that space. But as for the auto chart that I was just teasing, this I thought was quite interesting to put into perspective how the auto sector has done over the course of the last 5 years, because it was only a few years ago that the auto space was sort of leading global stocks, beginning of 2021, even for the start of 2022, we saw that white line outperform the blue line. But over the last year or so, we've seen a very stark underperformance, that white line very much below the performance of global stock markets. And does tell you that specifically there are concerns about the industry, the rise of EV, some of the supply chain constraints, and of course, the new salvos vis-a-vis tariffs. So all of that is weighing on the auto stocks. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, run us through the markets today.
Yeah, Jumana, we're seeing most markets kind of moving sideways, maybe hoping for more details from corporates and how they're coping amid these trade uncertainties, right? And this is, mind you, the busiest week for earnings this season for companies on the MSCI Asia Pacific. So just raking through some of the movers, we had Wuxi AppTec. This is a Chinese biotech company. Net income beat, it's showing strong U.S. sales. So defying some expectations that it would succumb kind of to the U.S.-China tensions. Apart from that, we're also keeping a close watch on some of these banking stocks in China, the mega banks. They've been sort of helped by recapitalization from Chinese authorities, but their margins likely to come under further pressure given the need for stimulus, particularly on the monetary front. So that's among the complex of stocks that we're going to be keeping a close watch on in the Asia Pacific today.
Avril, thank you so much. Russian President Vladimir Putin has declared a 3-day ceasefire in the war on Ukraine to mark the 80th anniversary of victory in World War II. The U.S. has criticized the move, with President Trump seeking a permanent end to hostilities and a peace deal. Joining us now is Bloomberg's team leader for Russian economy and government, Tony Halpern. So interesting that, well, I would say two things. Number one is that President Putin has announced yet another, what he calls short-term ceasefire, temporary ceasefire. It reminds me of what was announced around Easter, but of course then there were multiple violations. But then what's notable has been the U.S. reaction. Because we heard from the press secretary yesterday, and she suggested that actually the U.S. were disappointed that Russia's side are only looking for temporary ceasefire as opposed to permanent.
Yeah, and that was very notable because, as you've noted before, Russia has announced temporary ceasefires. There were accusations on both sides of breaches. But I think what lay behind this disappointment was the fact that the Trump administration was pushing very hard, as we know, for some kind of permanent ceasefire within the time frame of Trump's first 100 days. And Putin's decision effectively pushed that back another 10 days, took out the wind from the sails of the Trump effort. And I think that's fueling the disappointment in the White House.
What could be the next steps that the Trump administration undertake to try to get a deal across the line now?
Well, I think what lay behind those comments was increasing frustration in the Trump White House at the lack of willingness of Russia to sign up to a ceasefire. And President Macron of France indicated as much in an interview which was published earlier today, saying that he hopes to persuade Trump to push Russia a bit harder by threatening sanctions and by threatening some measures. So it may well be that the Trump White House is, in fact, weighing up whether it needs to adopt a tougher stance towards Putin.
And of course, we need to talk about that very special, notable meeting that took place between President Trump and President Zelensky at the Vatican around Pope Francis's funeral. pictures all over social media, obviously. Do you think that could have marked a turning point in terms of how President Trump is thinking about what happens?
Well, certainly President Zelensky intimated that it was potentially a turning point that came away. He said, having had very good talks, the White House called it positive. And following on from that, now there's this disappointment with Putin. So we may begin to see a slight change in the narrative between the US and Russia. And the US until now has been very willing to listen to Russia and to make concessions. And so far it doesn't really have any reciprocation from Putin. It hasn't received anything from Russia that would justify those kind of concessions. So it may well be that they are beginning to think, well, we need to adopt a tougher line here.
Yeah. Tony, thank you so much for the latest on that front. That was Bloomberg's Tony Halpin. Now let's turn to aviation. Etihad Airways has expanded its fleets with new aircraft to meet the growing demands in the travel sector. Joining us now is Antonoaldo Neves, Etihad Airways CEO. Good morning to you, Antonoaldo. Really good to have you with us on the show. Look, I'm going to start with the question that everybody is probably going to be asking you, but we're very curious to hear. What is the timing of the IPO? Because there had been speculation it was going to happen last month. Can you bring us up to speed?
Well, Romana, thanks for having us. I'm really honored to be here. It's been speculations, over the past 3 months, right? And we take that as a credit. Etihad has made a major turnaround process. We have improved a lot, not only on the service side and the customer service side, but also on the financial side. The airline today has a good balance sheet, a good profitability. So we take those speculations as actually compliments to us. Etihad is ready to go to the public markets whenever the shareholder decides to do so. But reality is we don't need cash now. So, let's see if and when the decision comes. And when it comes, we're going to be ready. But we don't comment on timeline speculation because in reality, the airline is doing very well.
Yeah. Okay. Let's move on. So you put out a press release yesterday showing that you're investing more into premium cabins. The goal is to deliver, and this is a quote, wide body comfort on short and medium haul routes. You're investing more in luxury. Why are you investing more in luxury? Are you seeing more demand out of first class and business class travelers?
We have seen, definitely. It's been a market that we are paying special attention. That segment of premium customers, especially in first class and business class, is, I would say, in peak. We've observing cabin occupations, load factors that are above 80% in business, above 70% in first class. So we decided to bring the luxury of the wide body to the narrow body. So we are the first airline introducing a first class suite, starting from the experience at the airport, right, until you get your bags in a narrow body. So our 321 long range is going to have a lie flat business class suite, a lie flat business class seat, and also a lie flat first class suite, as you can see in the images right now. We're very excited about that with a lot of privacy and a lot of additions to our customer that chooses first.
Yeah. I want to ask you about your retrofit program because that requires many spare parts and seats. And I wonder how the imposition of tariffs could impede your ability to get access to those spare parts. What are you thinking about the effect that tariffs are going to have on your own retrofitting program?
We're monitoring that. As of now, we technically don't see any significant or relevant impact. We are in a region that is not facing, right, the challenges that other regions are facing in terms of, I would say, uncertainty in respect to tariffs. So as of now, for us, it's good to go.
Yeah. Let me ask you about your fleet. What orders are you looking to make this year?
We have a 2030 plan that is aimed at doubling the fleet size as opposed to what we had in 2022. So we're going to be today we're about 100 planes. So we're going to be reaching about 160 to 170 planes by 2030 in the next 5 years. So in 2022, we had about 85 planes, so doubling in 8 years. All these planes are already committed, so we don't have any, I would say, relevant incremental fleet need until 2030. But we're actively engaging with OEMs and also with SORs to make sure that in a 10-year horizon, we bring in more planes to Etihad. And when is the right time to announce those? I mean, we'll be announcing. But as of now, we're locked in until 2030 with a very good fleet plan.
Can I ask you about the Boeing 777Xs, the planes that are yet to be certified, when you can expect delivery of those planes if you have an outstanding order?
I mean, we don't expect to get any 777Xs until 2030. So as of now, it's not part of our medium-term plan. I mean, we're going to be paying a lot of attention to the development of the certification of this plane, which is an important plane, right, for the long run. But as of now, we don't have any intention to fly this plane, and we don't need it for the next 5 years.
Yeah. Okay. Fair enough. On the wide bodies, what are you looking to? What are you considering adding to your fleet? Other airlines have told me that they're looking to make orders in the next couple of months. Can we expect something similar out of Etihad?
I mean, Etihad is ordering planes, I would say, almost every month, right? We keep adding to the fleet. We're not in the order announcing business. I mean, our business is to sell tickets. So what we like to do is to announce new destinations. This year, we have announced 16 new destinations. I mean, since 23, we have added more than 70 planes to the fleet, 70 new planes, without making any big announcement. I mean, we're here to announce new destinations, I mean, new product, new seats. I mean, it's for the manufacturers to be announcing how many planes they sell, not for us.
Yeah. Okay. So then final question to wrap up vis-a-vis destinations. How are you seeing passenger travel demand this year? And also, I'm curious to see whether there has been any hit to people wanting to travel into and out of the United States because of President Trump's policies.
Jumana, demand is very strong, very, very strong. I mean, last week we had a couple of days with 92% load factor. This is too high, actually. Because every time you go that high, you're spilling demand, right? So we're blessed to be in a region that demand is strong. I mean, Abu Dhabi as a tourist destination is booming. We just, I mean, saw the numbers that are picking up for April, May, and demand is doing very strong. We have a benefit because our network is not concentrated in any market. So when you have a dollar that is weakening, right, this is more opportunity for Europeans to come to the Middle East. This is also more opportunities for people from India to go to the US. So I can guarantee you as of now, I mean, based on the network we have, right, we haven't seen any slowdown. We understand in other regions, I mean, especially domestic, there's some slowdown, but in our case, we're keeping our objectives for the year.
Very clear. Sir, well, we really appreciate your time. We know you're very busy, so thank you for coming on our show today. Antonoaldo Neves, Etihad Airways Group CEO. Now, coming up, the HSBC first quarter pre-tax profit beats big time. The lender also announces a fresh buyback. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Well, let's recap HSBC earnings. The lender reported a big beat in profits and announced a $3 billion buyback. That is despite an increasingly fragile geopolitical backdrop that has weighed on the global economy and markets. For more, joining us now is Thomas Noetzel, our senior banking analyst at Bloomberg Intelligence. Really strong set of results from HSBC this quarter, Thomas, and driving those strong set of results from what I can see is the wealth business as well as, like the U.S. banks, trading activity. What stood out to you?
Yes, good morning. Yes, definitely a strong set of 1Q results across all board. I would say revenue strong, cost under control, cost simplification under control, credit loss a little bit higher to account for macroeconomic uncertainty, but again, in line with consensus. So yes, definitely a strong beat. and strong start to 2025. And share buyback is just confirming strength of the balance sheet of HSBC.
Yeah. What about the outlook and the guidance that they're giving, especially vis-a-vis the uncertainties surrounding global trade and the global economy here?
Sure. So definitely a very good confirmation today of that. We are maintaining the guidance for 2025. We stick to 42 billion net interest income for 2025. But there are two possible tariff and ECL scenarios that will be shaping the sentiment possibly in the near term and in 2025. So we talk about the tariff impact on revenue, which can cost the bank a low single digit on revenue, according to the guidance, and ECL, which can increase by $500 million should the scenario take place. So definitely this, I think, will be the focus of the 1Q call. What are the possibilities of those scenarios to play out, and when those can play out, and possibly second quarter will give us more answers. At the moment, we don't yet see the impact of tariffs on macroeconomic data. It's still looking quite strong, but what will come in the next few months are the key questions, and those scenarios are definitely giving us sort of guidance and insight how to think about deteriorating outlook should it deteriorate.
What about the cost reduction numbers? And obviously, this has been a big focus of the relatively new CEO, Georges Hidri. $1.5 billion of cost reductions announced today. They're saying they aim to generate 300 million of cost reductions in 2025. Is that in line with analyst estimates?
Yes, that's exactly what they said during the 4Q results. So it's all in line. The cost simplification is on track, and there's a high chance that they will deliver on what they plan to deliver. So 1.5 billion in the next 2 years. High cost to achieve of about 1.8 billion as well is already baked in by consensus. So there's no surprise over there. There can be maybe upside surprise in the future that the bank may speed up the process of cost cut, but that's something we can discuss later this year.
All right, something to think about. Tomas, great to have you on. Tomas Natsal, our senior banking analyst at Bloomberg Intelligence, talking us through HSBC's strong results today. Plus, stay tuned for our exclusive interview with Goldman Sachs CEO David Solomon. That is happening later at 1:30 p.m. Dubai time. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. 3 major Abu Dhabi entities, including a sovereign wealth fund, plan to launch a stablecoin. They include ADQ, First Abu Dhabi Bank, and International Holding. Now, the token will be fully regulated by the Central Bank of the UAE and backed by the dirham. The move could speed the Gulf nations' efforts to adopt digital currencies and facilitate payments. And Angola is considering IMF financing as trade wars and a slump in energy prices effectively shut the oil producer out of international bond markets. The nation's finance minister held talks with the lender in Washington, but is also mulling loans from the World Bank and African Development Bank. Bloomberg's Ndiro Ganga joins us now. Ndiro, maybe just walk us through how Angola is looking to square the circle, what their financial options are right now.
Hi, Jumana. So their best bet right now is concessional financing, like you mentioned, from IMF, World Bank, and the Africa Development Bank. At this point, they cannot afford to go to the international market. Interest rates are really high. They had tried to sell a bond of $1.5 billion earlier on in the year, but yields are at 13.5%. That's the highest for any government. So they're looking at low-hanging fruits like the IMF, and this is not the first time they've gone to the IMF. They've had 2 programs under the IMF. Their last program ended in 2018, where they got $3.7 billion under the extended fund facility. And this is really important at this moment because they're entering into a period of rising debt servicing cost. According to the minister, a bulk of their revenue is going into paying government salaries and also servicing their debt. By November of this year, they need to raise about $864 million to be able to pay a maturing bond. And this is a country where currently they've fallen back on paying some of the service providers for the government. This coupled with the fact that they're scaling back on subsidies and they don't even have enough money to import food into the country. They risk political tension and heightened volatility. That is why we're seeing these conversations with the IMF.
Yeah, and on zero, look, I think it's important to flag here how dependent the Angolan economy is on oil prices. So how is the price action oil likely to shape the country's budget and spending for this year?
Any slight changes in the international commodity market of oil massively affects the economy back in Angola. And the minister is acknowledging this and saying that they're currently working on a stress analysis to assess the impact of changing and fluctuating prices of oil in the global market. They had pegged their budget at $70 per barrel, but they're saying that whether it goes to 50, 55, 60, 65, they're prepared. She says that at 55, they're able to manage their budget without seeking external assistance, but they'll have to rework those numbers. And this is an economy where oil and gas form a bulk of their exports earning and government revenue. So this is a time where they have to rethink the composition of the economy and start working on diversifying just because of how volatile the international market has been.
Ondiro, thank you so much. Bloomberg's Ondiro Ganga in Kigali, Rwanda. Well, if you are tuned in early from Spain, some good news for you. The Spanish power almost entirely restored per the grid operator. This, of course, after the blackout that took over the country and parts of Portugal for most of yesterday afternoon. But this just coming through from the grid operator now saying the Spanish power is almost entirely restored. Of course, the government itself is facing questions as to how this blackout even happened in the first place. So something for the Prime Minister Pedro Sanchez to deal with. But good news if you are based in Spain. All right, well, that was it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. Tom McKenzie is going to run you through some of the price action in Europe today, alongside some of those European bank earnings with those strong results from HSBC. This is Bloomberg.